Hi there, folks. Sean Broderick here. I'm at the New Orleans Investment Conference, and I'm speaking to someone I've interviewed before, Rick Van Nieuwenhuyse. Now, he is the president and CEO of Contango Ore. Fascinating company, working up in Alaska. They have a project. They have a big partner. They have a timeline to production, and there's so much more. He's going to give you the scoop. Please speak to my subscribers.
Sean, good to see you again, and thanks for pronouncing my name very well. So, that was good. So Contango is a bit of a different story in that we're going to achieve production by not building a mill in a tailings facility, which is probably something that would cost hundreds of millions of dollars in today's inflationary environment. You really don't know exactly what it's going to cost if it's 5 years from now, and more importantly, it would probably take you 5 years to permit. We've shortcutted all that by partnering with Kinross, who has the Fort Knox mine. And has
Which is not too far away?
It's about 250 miles. It's a bit of a distance, but that mill is underutilized, so they have excess capacity. They can process our ore there. So we formed a 70-30 joint venture with Kinross, and we're going to mine the ore. We're all permitted to do everything that we need to do to mine the ore. We've got some work that we're doing right now, constructing roads and constructing laydown areas in the camp, the operating camp. All that's underway right now. So we're starting to spend capital, from what the feasibility number was, $180 million. That some of that capital is now being spent. About $30 million will be spent this year, and that'll leave about $40 million for us to spend over the next 2023, and then we should be in production in 2024. Early if everything goes according to plan, but nothing ever goes according to plan, so maybe it's second quarter rather than first quarter.
Many mines have delays. That isn't a huge thing. As long as you have money and you have a timeline to production, you have committed partners, that's not a huge deal. So this is the Manh Choh project, right?
This is Manh Choh project. It's actually two small open pits.
All right.
It's very high-grade deposit. It's 8 grams per ton that will be run-of-mine material will be loaded onto the highway trucks. They'll be right at the edge of the pit. And then they're going to drive up to the Fort Knox mill, build a stockpile, a 250,000-ton stockpile, and then campaign process it through the Fort Knox mill, or what they call batch processing. So basically, once a quarter at Fort Knox for 3 weeks, they'll dedicate running the mill for Manh Choh ore, and then the rest of the time it'll run the average grade of Fort Knox, which is about a half a gram.
And your average grade is what now?
8. So 20 times the grade that the mill is used to processing. So it'll be a happy mill because it'll actually have a bunch of gold in it.
Yeah, it will. That'll be great. Okay, and so you have your plan laid out. I mean, you'll be carried along. You have to make a portion of the investments along the way, but you know where it's going.
Yep.
And so, what's the next thing for you guys?
Well, so we've got some capital to raise, so I'm putting the debt financing in place, and we'll probably do $20-30 million of equity so we can run the rest of the company and the other businesses that we want to advance, which for us is our focus. Kinross they're doing all the heavy lifting at Manh Choh. We have to stay good on writing the checks and all that, but basically what we're going to spend our time on is on our next project, which we think will be our next mine, would be Lucky Shot, and that's a high grade quartz vein with gold, and got a sample here that has the free gold in it, and you can see if you flash around in the light there, you can see it's got.
I will post a picture of this along with this, so you can see there are flecks of gold in this rock. And you found this on a trash pile, is that right?
So this is from one of the dumps at the Lucky Shot 500 level. I'm embarrassed to say that our mining engineer found it and not our geologist. But it's and this obviously should have gone to the mill.
Yeah.
Back in the old days, this would have been probably running 2-3 ounces per ton. The average grade of the mine at Lucky Shot when it was in production was 40 grams per ton. That's an ounce and a half. It was shut down in 1942, so it operated from the late 20s to 1942 when President Roosevelt used the War Act to shut down all gold mining in the United States. it's a fact that a lot of people have kind of forgotten about.
No, but it means there are these great mines around the country, and I've been to some in like Nevada, for example, where they just shut everything down in 1942. They were running fine up until then, but the war came along, and they needed the men and they needed the effort elsewhere, and so they shut down perfectly good mines, and now you have one of those, right?
Or more nefariously, they wanted to control the gold price. A bit, too, so
Well, our audience will like that.
That's
yes.
a different topic, so we'll save that for later. But yeah, this thing was shut down in 1942 administratively, and it only saw two. And of course, this is old patented mining claims. Then what happened is it went in 3 different families and got separated, and so basically nothing happened until 1980 when an oil and gas company, Ensearch, decided to get into the gold business. And you remember 1980, gold price went up to $800 an ounce. And by 1982, it had gone down to about $250, and the Ensearch Oil and Gas Company board said, "What the heck are we doing in the gold business?"
They were throwing good money after bad at that point because, it just wasn't going to be worth their while to actually pull it out of the ground.
What they left us was some good infrastructure because they started a tunnel towards the vein, and they were just going to go down dip for the vein and start mining. They actually built a mill. They just walked away from it and all that in 1980. By 1983, they were gone. The other period of exploration, significant exploration, was in 2004 through 2010. A company called Full Metals drilled 176 holes from the top of the mountain. And this is a big mountain. It's a very steep mountain. And they had drill pads plug onto the side of the cliffs on the mountains with big cribbing and helicopter supported, very expensive program. And they drilled 170 holes, and they outlined 120,000 ounces of gold at 18 grams per ton on an adjacent claim that at the time wasn't part of this package. Next serious group to come along is ourselves here, and we just continued to do what Ensearch started, which was the right plan, just to get underneath the ore body, drill the heck out of it. It's high-grade vein, and so that's what we're doing. We're in the process of finalizing the footwall drift. That'll be right in the footwall of the vein, and in another week or two, we'll be moving the drill rig in there, and we'll drill fan holes across the from the tunnel in the footwall across the vein, from vertical holes to horizontal holes.
Okay.
And then we drill a lot of them.
So the mill that they built, has that been rehabbed, or do you have to build a new mill? Or?
It's a rust bucket.
Oh, okay.
No, it's I think what we'll take a hard look at here is just doing the same thing we're doing with Manh Choh. We'll have a conversation with Kinross. And
how far is...
It's about the same distance.
Is it? Okay.
Yeah, and we actually have the rail on our side.
Oh,
we're just north of Anchorage, so we're probably 10 miles from the railhead.
So you can just bring the ore to the rail line and
down
ship
the rail
it up.
line and truck it up, or rail it up to Fort Knox. And
that'll be much cheaper.
We haven't had any discussions with anybody about this, and we're still very much as an exploration. It's an exploration play. But when you get steel rocks like that on the dump, you get pretty excited.
Now, one question I've had about your company in the past when I've looked at it is, even though it's listed on a U.S. exchange, it has low volume, but you're doing things that should change that, right? Could you explain that a bit?
Yeah, so, we've only had 6.8 million shares outstanding, which, is fewer shares than most shell companies.
Yeah.
So we've been very prudent, in terms of managing our capital structure. But, and we've been sort of almost self-financed by, a bunch of wealthy Texans who like gold. So we are going to do an equity raise. I told you we're going to raise some debt for Manh Choh. We'll at the same time raise some equity so that we can do the other things that we want to do, like advanced Lucky Shot. We have other exploration projects like Shamrock, Triple Z that are right adjacent to the Manh Choh project. We own 100% of those. So we'll be doing some an equity financing to get more liquidity into the stock.
Okay, cool.
But we'll address the liquidity issue. Right?
Yeah. I mean, that actually has been a problem in the past. Is there just wasn't enough liquidity to actually trade the stock. So by issuing shares, raising the money, there'll be enough shares that will actually start to see the stock be able to be traded. So I think that lifts a huge question mark off it. Is there anything else you'd like to add before we go? And we should give people the stock symbols.
Yeah, so trading symbol is CTGO on the NYC American. We're not listed in Canada. Stay tuned for our look at our website, obviously, contangoore.com for news updates. And if you want to be added to the list, just write us a note at info@contangoore.com, and we'll get in touch with it. And if you have any questions, just write the questions to info as well, and I'll get back to you.
Okay, just to sum up, right? So they have a big old partner here who has taken a majority interest in the Manh Choh project and is pushing it along to production. So early 2024, that should go into production, unless there's some hang-up. Sometimes there is with a mine, but it wouldn't be a big deal because, I mean, big companies, they want the mine, it'll happen. When that happens, as it happens, they're raising cash and issuing shares anyway so that they can explore another product. So they have another thing to work on, and it's high grade all the way. I mean, you see companies struggling with deposits that are under 0.5 gram per ton and stuff. These guys have such high grade you could practically measure it in ounces if you wanted to. So there's a lot going on here, and definitely worth a look. And so we will definitely look at Contango Ore and what they're doing. It's one we have to keep our eye on. Thanks very much for speaking to my viewers.
Good to see you again, Ron.
Good to see you too. And you folks stay tuned. I'll have more for you from the New Orleans Investment Conference.